Hello friends, this is Raj Satri from Raj Option Trading. Today is May 31st, 2021. So with that, let's look at high volatility option strategies for the week of June 1st, 2021. Few examples of high volatility strategies are selling put option, selling put spread, selling strangle, also selling iron condor, buying butterfly, etc. So the thought process here is really implied volatility is high. So when implied volatility is high, you want to be an option seller to get the premium in, and you got to be careful too, so that way you don't get, take too much risk. So with that, let's look at few stocks and look at few ideas. Here I got examples of some stocks here. The way this chart is organized is I got companies here, and I have a sales growth here. When you're selling premium, for example, selling put or put spread, you want the stock to go up. So that way, stock goes up, the option expires, you get to keep entire premium. That's one way to look at things. And I want gross margin to be high. As an example, there's a good gross margin here. And as you scan through this, I want debt to equity to be lower, so that way company is not taking on too much debt. I want institutions to own a lot more portion of the stock. And also RSI, I want to be a little bit lower, so that way stock has room to run. ROE talks about profitability of the company. I want ROE, return on equity, to be high. And as you look through here, short float, typically when there's a high short float, which means stock can have a short squeeze and go up drastically. In contrary, stock can also go down, and these short sellers will get benefit. And price to sales ratio, I think we want this to be low as possible, typically lower. But when you see 53, 100 plus, 88, a little bit, this a little bit high on the valuation. You got to pay close attention there. And IV percentile, we want this to be high because we are option sellers. So that's why we want IV to be high. You can bring in more premium. We want volume to be high so you can get trade in and out easily. And earnings, you got to make sure, at least understand when are the earnings. For example, for EHang, earnings is 6.4, which is next week. That's why IV is high, 77. So, make sure you are aware of when is the earnings. If you are trading around the earnings, limit your loss or a risk profile, so that way you can make profit. And then I want to make sure there's a good performance here from a 10-day, 1 month, 3 month. That's a good performance. That's what you want to look at. And you also want to make sure there's good room for stock to run. You don't want to sell a put option when the stock is at a 52-week high, unless you are careful, you did some good research. So with that, let's look at few examples here. First one I look at is probably let's go through the list here. TAL Education Group. As you look at TAL here, the stock is doing okay, good sales growth. But if you look at 10-day, 1 month, stock is kind of stalling out. Unless you see a good area of resistance, you got to be careful here. Let's look at TAL as an example and see what we can do in TAL. It's a $39 stock. For that, let's go to Thinkorswim platform and go to TAL. So TAL, if I go to chart here, as you can see here, stock has gone down drastically. They had earnings back in 422. Now stock is trying to go up slowly, as you can see here. On the balance, volume is stabilizing, trying to go up a little bit. RSI is, I think it went drastically. Now it's kind of stabilizing. DMI, there's a lot of gap between blue line here and the red line. That tells you right now it's in a bearish territory. We want this gap to narrow down, and we want the blue line to go up, red line to come down. And also, if you look at volatility is it was high before. Now it's kind of petering out a little bit. Still, its IV percentile is high. It should be ideal to sell put option around this price here, but this is not too bad either. From a check-in money flow perspective, smart money is flowing into the stock, which is a good story here. So with that, let's go to TAL quickly. When you are selling put option, you want to have a lower time frame. For example, here 46 days is a good time frame. 46 to 45 to 50 is a good time frame to sell premium. You want to limit your exposure to lesser number of days and still bring in some good money. So with that tall $36 stock, you could look at maybe selling. There is not too much money, as you can see here. If you sell 25, not good. 30 could be a good story. So or even 32.5, 35. 35 is too close. 30 is good. If you want to sell put option outright, you could sell. You could collect 75 cents or $75. If the stock stays above 29, you'll break even. If the stock goes above your $30, you get to keep your entire money. So that's one way to play. I think with this, your buying power effect is 305. Your max loss is 2925. So this is one way to play. You could sell this premium. You could sell this put option, collect $75, and if the stock stays above 30, you get to keep $75 for yourself. You could even sell this and make some profit if stock goes up in the meantime. That's one way to play, and you could also look at spread strategies. For example, you could look at 32 here and 27. You could sell this spread as an example. Sell vertical. So I'm selling 32.5 and buying 27.5. There you go. So I'm collecting 75 cents just like before, but here my exposure is limited. My max loss is 425, not as big as previous scenario. So this is a little bit one idea to limit your exposure and sell premium. Let's look at one more example here as I scan through this. There are very good examples. I love Silvergat. Also, it's a great stock. Silvergat, as you see here, IV percentile is 52. Not good enough for us to make any money. And if you look at Biogen IDEC here, very good IV percentile 95. Let's look at and see what's going on in the Biogen IDEC. So with that, let's go here, put BIIB. So BIIB, it's a great stock. I love this stock. And as you look at this, looks like they got an Alzheimer drug. There's a moment of truth coming up. So June 7th is the date investors should circle on the calendar. So looks like FDA is supposed to be providing approval whether this drug is good or not. So that's a high, very good risk reward type situation here. If they do well on June 7th, stock can go up, easily 10-20%. This stock is known to go up and down drastically. But if this drug does not do well, stock is going to come crashing down. So with that, let's see what we can do here with this scenario here. And if I close this here, see here, let's close everything. 46 days out, as you can see here, 83%. This is the implied wall, 83. So it's a high IV, as you can see here. And looks like more folks are buying calls than puts. That's a good scenario. That shows many people are bullish here. So let's go here and to take, because there is a binary situation here. There is a drug approval. It can go up, north or south. It can be approved or not approved. So we got to be careful here. Stock is at 267. So we it's a little risky proposition. We could sell an iron condor here because IV is very high. So 267, so I could go 265 here, and I could basically sell iron condor. There you go. If I sell this iron condor, as you can see here, uh, so it's a two. I'm selling a call option at 270, buying back at 275. That's a $5 exposure, and I'm buying a selling a put option at 265 and buying it back at getting a protection at 260. So by doing this, I'm getting a $4.30 credit. So that's a good amount of credit to collect. So if I confirm and send here, as you can see here, I'm collecting 430. My max loss is $70. And if I also look at analyze tab here, go and do analyze. So if you look at the analyze here, I have um, I have iron condor. Let me remove this iron condor. As you can see here, if the stock stays between 260 and 2 274, this is when I make money. If the stock stays exactly at 267.58, this is when I get to keep all my $4.30, $430. So this is where you got to be careful. Stock, after the Food and Drug Administration, their approval or disapproval, stock can go either way. So we are basically at this point betting stock will stay within 260 and 274. So to take this bet, let's go back to the trade tab here. Let's see what happens. So if I do this, I collect $430 right away, and my max loss is $70. Basically I'm not losing out too much, and the buying power effect is $70. So this is a scenario where if you lose, you lose $70. If you win, you win 430 or somewhere in between. So it may be okay risk reward type bet here. Hopefully, the stock does not do too big a move. But even if it does, you're losing only $70. This is one way to play. So other way to play is really you could look at the chart here as an example. If I go back here, so by looking at the chart here, you could try to see there's an upper bound here. It went all the way to 363. There's a lower bound here. It went all the way down to 223. I could maybe sell a put spread around 220 or so. Let's go back here and go to trade tab. 46 days out, I want to limit my exposure here. We talked about 220. 220 is here. I could sell a 220 210 spread. So sell 220 210. There you go. So if I do this, I bring in a credit of $1.85. My buying power effect is 815. As long as stock stays above, two. Let's see if the stock is, yeah. If as long as it stays above 220, I get to keep my entire premium, and which is $185. This is a good strategy. Hopefully stock will not go down too much. If it goes down drastically, my max loss is 815. But if the stock stays above my sold put here 220, I get to keep entire money. So this is one way to play. And you could also do something like a butterfly stock at 267. You could go to 260 here, or 265 is a better bet. You could basically buy a butterfly. So as an example, if I go butterfly, and basically if you do that, you are selling two put options. As you can see here, sell to Biogen IDEC put at 265. Because implied vol is high, by selling two put at this price, you're collecting or bringing more money in. And you're also getting some protection both sides, 270 and 260. So that way you limit your exposure. So by doing this, you're collecting $1 and you are actually paying $1.40. And if I confirm and before I confirm and send, let me go to the analyze tab here. So if we go to analyze trade here, let's go to butterfly, the one that we just bought. So if you look at this butterfly here, So as long as the stock stays between these two area here, you get to make money. Your max profit is when the stock stays at 264. But when the stock goes below these prices here, 271, sorry, 261 and 268, that's when you start losing money. So with that, let's go to trade tab again, try to confirm and send. So with this butterfly here, you already paid $1.40 here, and your max profit is $360. Your break-even prices are 261 and 268. So this is another way to play, to really take advantage of this high volatility scenario and really sell, two puts at a little bit higher and bring in the premium and get protection both sides. Maximum you lose is $140 and maximum profit is 360. So it's a good proposition here. And also if you go back to the analyze trade tab here again one last time, and look at this one last time here. Let's remove one of them. As you can see here, there is some chance that this stock might stay between these two prices. If it does, you'll make good amount of money. This is the other way to play. Now let's go back to the chart again, and we can look at one or two more here. For example, QFIN, as you see, look at this, not too great from a IV percentile perspective. IMAB, I think 329, their earnings is all done. There is a high IV percentile. Let's look at what's the situation in IMAB here. Stock has been going up nicely. And they're 4% down. See, I would not sell put or put spread here because they're almost at a 52-week high. I would rather look at QFIN as an example, but QFIN IV percentile is low. I will not make too much money. I could look at Southern here. Southern could be a good one here because it's the 16% down. There is a high IV. I could look at SCCO. So it looks like Southern Copper, they're trading higher. Copper prices are going up. That's a good story. So if you go to the chart here, Southern, I think they've come down. They're trying to make their way up. Volume on the balance, volume is going up. Good. Right now it's bearish. Gap is lower or narrower. That's a good. And RSI is going up. That's good. Check-in money flow trying to stabilize at this point. That's also good. Implied wall through the roof. That's good. So with this, I think it's a good situation here. We can go to SCCO. We can do 46 days out, and we could probably 69 right now. I could sell a put option probably at 60. If I that this is a good one too. If I do that, I will bring in $1.10. I could confirm and send. Or I could also do a spread here. I could do 60-50 spread. So sell vertical 60 and 50. So I'm actually selling a 60, buying a protection at 50, $10 wide exposure. I'm collecting 85 cents here. I could confirm and send. So this is a little bit risk is low here. I could do something along these lines. So with that, let's go back here. So this is a full list. You can go through them and see where you can make some money. Look at the candidates where the IV percentile is higher and RSI is lower if you want to sell put or put spreads. And you could also do things like iron condor like we looked at, or butterflies, and there are various other strategies. Thank you very much, and happy trading.